individual, both taxpayer as well as the investor, we've got you covered on NDTV Profit. Over the course of the next few minutes, we'll take you through the main changes so that you're prepared when you go and talk to your chartered accountant. I have, in fact, two of those individuals, those professionals, to take you through the main changes. On my left, I've got Mayur Shah, who is a partner at EY. On my right, I've got Arvind Rao of Arvind Rao and Associates. Now, gentlemen and viewers, the most important change, of course, has to do with the slabs that have been changed. And this is on the new tax regime only. Remember that the old tax regime does not change at all. By the way, incidentally, the finance minister is saying that 2/3 of individual taxpayers have now moved to the new tax regime, in case you were wondering. Now, what has changed? The slabs have changed. Let's talk about how those slabs have changed first. Mayur, just two have changed.
That's correct. So, earlier, 5% slab rate was ending at when income is up to 6 lakh, which has been enhanced to 7 lakhs. And the second slab, which was ending at 9 lakhs, where 10% rate was applicable, now it has moved to 10 lakhs. So to that extent, the slab rate has changed. Otherwise, the rates has remained the same, the way it was earlier. In addition to that, there is one more change which is there, that salaried employee who are going to use new tax regime, earlier standard deduction was 50,000, which has been enhanced to 75,000. So if we look at all in all, maximum benefit one can derive because of the new tax regime versus old, last year's new tax regime is 17,500.
17,500.
17,500 rupees is the net saving which a person can achieve.
And we also calculated this on 10 lakh rupees just to see how the math works out. And it's effectively about 10,000 rupees that you would benefit from. There's a small additional change, and this is only if you are making purchases abroad and using the liberalized remittance scheme. And this is a tax collected at source that was announced in last year's budget, if I'm not mistaken, or the budget before that.
Well, it got formalized in the budget that happened in Feb.
And what's the change?
So change is not much. Like earlier when TCS was getting deducted on the LRS money, that was always available as a credit, but an employer could not take credit of that because there was no provision to enable it, which has now got enabled in this proposal in the budget.
So effectively, you can tell your employer that this is your tax collected at source.
Yes.
And they will adjust your tax deducted at source for the rest of the financial year.
Which means a little more money in hand for people who have suffered TCS.
I like the word suffered TCS. All right, but let's talk about the other main change. And this is important from the perspective of your investments. First and foremost, there's a big change on equity, and that is both short-term capital gains tax as well as long-term capital gains tax. Mayur, what's the change?
So change, earlier listed company, when we are selling shares of listed company, short-term capital gain was taxed as 15%, which has rose to 20%. Whereas long-term capital gain of such listed security, which was taxed at 10%, now it is going to get taxed at 12.5%. So that is a big change, which is...
And the exemption has changed.
An exemption, yes, from long-term capital gain, exemption which was up to 1 lakh, now it has been enhanced to 1,25,000.
Okay. So effectively, the rate that you're paying, the tax that you're paying on your capital gains for all equity is going up, and going up not by a small margin. There is a change also with regard to the treatment of long-term capital gains. The definition has been clarified, and what it is said is that all financial assets, the gains that you will get from those assets will be treated as long-term if you hold it for at least 1 year. So beyond 1 year, it becomes long-term. For non-listed assets, and this includes the likes of real estate, the likes of gold, and various other things, that gets treated as long-term if you're holding it for more than 2 years. Now, previously, remember, only real estate was 2 years, whereas gold and several other things were treated as long-term if it was beyond 3 years. Now, what is also important is that we're doing away, or rather the government is doing away with indexation benefits, which was a major benefit. But we're also coming to know that that's not making too much of a difference. How do you calculate that? How do you explain that?
Well, actually, it was with indexation, you were paying a 20% tax, which they have now abolished. But at the same time, the 20% tax rate has been reduced to 12.5. So I think some of the numbers which we have been doing at the top of the table indicate that for a lot of sales that will happen that have for purchases done in the last 10 to 15 years, this reduction in the rate is compensating for the lack of or
It's actually
abolition
beneficial.
of, or and in some cases even beneficial.
So, in case you're unfamiliar with how this works, indexation benefits adjust for inflation. So, there is an index which will tell you how the prices have increased over a period of time. What you do is you look at the cost that you paid when you bought the property, for example. Take real estate as an example. If you held it, for example, for 20 years, and if that gain was 1 crore rupees, okay, if your capital gain was 1 crore rupees, what it will do is it will calculate your cost, it will calculate how much the inflation has gone up over that period of time. It will adjust for that inflation. That inflation will be deducted from the capital gains that you make, and you were getting charged 20% on that capital gains. Now, indexation is done away with, but it's a flat fee. But that flat fee is much lower. It's at 12.5%. So net, and Mayur was doing the calculation. It's if you bought around 2003. Beyond that, it's actually not making much of a difference. In fact, it might actually be beneficial.
Yeah, that's right. So if you have bought a property after tax year 2002 and 3, definitely it will be either beneficial or neutral from a taxpayer perspective. But if it has been bought earlier than that, there will be a slight loss which you will suffer, but not a big one. But yes, certainly there will have some impact, negative impact on those.
The very last thing that I want to talk about has to do with the buyback of equity shares. Not is it? Yeah, it's buyback of equity shares. So previously, dividends that were distributed by a company were taxable in the hands of the recipient, that is you, the investor. What the government has now announced is that buybacks will also be taxed in the hands of the recipient. How does that change, Arvind?
I think they have actually gone back to the way it was. So for a good period of time, buybacks were always taxed in the hands of the shareholder, and it's I think some 2 or 3 years when they introduced this regime wherein the company who was doing the buyback would have paid the tax on behalf of the shareholder.
And deducted at source.
And deducted, it was around 20%, which they used to deduct. So now they have gone back to the old thing where not only dividends, as you mentioned, but even the buyback will now be taxed and paid by the shareholder instead of the company doing the buyback.
And that's capital gains, right?
That's capital gains.
So effectively, even this, and we were discussing this again, and we were doing just a comparison and saying that it's still beneficial if companies do a buyback from a tax perspective because the dividend is taxed at your slab rate. And so if you are in the highest slab, it is more beneficial for you to receive benefits if the company is doing a buyback.
But also it has a different advantage if you look at it from a cross-border transaction perspective. Because buyback was not taxable in India, but same thing was taxable as long-term capital in the other countries.
Right.
And therefore, the taxes which has been paid by the company was never allowed as a credit in the home country where they are residing in. Now with this, whatever tax is paid in India will be eligible as a credit in the home country as well. So to that extent, it kind of, puts in a better situation for international investors in India. So to that extent, I find this is a good move from removing it from the company and putting it on the the investor so that they can claim credit in the home country as well. So there is no double taxation happening then.
Fantastic. All right. So you
And since you're speaking about the benefits here, we are forgetting about the NPS.
Oh yeah.
So I think one very, very welcome change is for all those people who have moved to NPS for the last couple of years, that for private sector employees, it was capped at 10%.
Your
That is
deductions.
deductions for the NPS deducted by your employer and paid, which has now been taken to 14%. So that's a very, very welcome move, I think.
Okay. So we're getting questions online, and I think the most important question that a lot of you will have, and that has been asked, is should you move to the new tax regime or should you hold on to the old tax regime? And there are simple calculations that you can make. Of course, your chartered accountant can help you, but we have to here, so I might as well ask both of them. Arvind, you were doing an Excel sheet calculation just to look at a few scenarios. How does it work?
So I somewhere agree with the finance minister when she said that 2/3 have moved. So unless the deductions that they're claiming is not in the range of 3 to 3.5 lakhs, which could mean anything, your HRA, your home loan interest, whatever. If they're not exceeding that limit, then new regime is definitely beneficial. And for all those who are claiming deductions more than this amount, for them old regime still holds some promise.
Okay, there you go. And if you want simplicity and you're okay paying a little more tax, even if you have rent, for example, or you're paying interest on a home loan, then maybe the new tax regime is for you. We've taken you through the main changes with regard to the income tax slabs and also the capital gains tax, which incidentally is a very large announcement. It's something that has been asked for a long time. That rationalization has finally taken place. But if you still have questions for us, don't forget to write in on the comment section. You can even write to us on any one of our social media platforms and we'll take them up. Do stay tuned. This is NDTV Profit.